Hello and welcome. You tune into Your Trades with me, Ankita Saxena. Well, this is the show where we take you through the roundup of how the markets shaped up in today's trading session. Well, the market started on a very decent footing in the morning, but come second half, those gains were given up. In fact, sectorally also, all the gains were reversed. If you look at Nifty, we managed to touch those 22,600 levels, and thereafter in the second half came the sell on rise, and we declined. We actually from the tops, from the high, we declined almost 186 points on the Nifty. We shut shop at 22,460 levels on the Nifty. Nifty Bank also ditto. In fact, Nifty Bank saw a sharper decline of almost 360 odd points. In fact, the Nifty PSU banks were also reeling under a lot of selling pressure today. Besides that, even the private banking sector, there are cuts of almost more than 1.5% on the Nifty PSU banks coming in. But in the private space, also IndusInd Bank was reeling under selling pressure. In fact, at one point it was down almost 6%, but that came on the back of the news that RBI has revised the tenure for the MD and CEO to 1 year instead of 3 years expectations. On the back of that, even the brokerages turned rather cautious on the bank, and the IndusInd Bank was reeling under selling pressure with cuts of 3.8% in trade. Sectorally also, Nifty Metal was the shining beacon today in early trade today because of the big note that came out by Jefferies, where they were maintaining a constructive stance on Indian metals. In fact, they'd given a buy call on Tata Steel, on Hindalco, and they had also raised the target price. They feel that the metal stocks have outperformed the Nifty, and going ahead also on the back of the revival of Chinese demand and expectation to safeguard duty on steel in India, metal packs looks very good. So metals were running up, but during second half we gave up all those gains, and in fact that also ended the day with cuts of almost 0.8%. The only sector that was holding up marginally in the green was the Nifty FMCG. That was holding the fort. The defensives were holding the fort. In fact, we had likes of HUL that closed up 1.9%, almost 2% in trade. We had Nestle also that was trading in the green. We had ITC and so on that was trading in the green as far as the FMCG pack was concerned. Another pack that was in focus today was the power stocks that extended their gains. Well, that was on the back of the demand optimism coming in. Also, we are expecting hotter than expected summers this year and so on. The power companies were in focus today on the back of the power demand going up. We also had a couple of other names. In fact, the pharma pack, a couple of names that were in focus. We had Narayana that was in focus today on the back of a JV. We also had Sun Pharma, Alembic, Lupin, and these names that were in focus today from the pharma pack. But Jill, let's get a sense of how the market should shape up in this truncated week. Let's get our guest on board, and right now we are joined by Aditya Agarwala, who's the head of research and investments at Invest for Edu. Hi Aditya, thank you so much for taking the time out and joining us.
Hi Ankita, good afternoon. Thanks for having me on the show.
Aditya, so tell us, this looked like a case of, sell on rise. If you look at the last 5 days, I see, at least Nifty is up almost 2% in the last 5 days, 5 odd days. So is it a thing to be, does it give you some sense of semblance, or is it a case of like a temporary bounce back and now we can see that sell coming in on the rise? What are the levels also that you're working with?
Ankita, clearly 22,700 on the upside is acting as a major hurdle for the index Nifty. Till the time it takes out 22,700 decisively, markets will remain a little choppy and volatile. And this is the first case of a pullback from the lows of sub 22,000. And after that pullback, markets are bound to give away some of its gain. And that is what exactly we saw in trade today. Now going ahead, it will be important to see where markets actually halt this week since it's a truncated week. It's crucial to watch whether Nifty takes supports at 22,200, 22,300. These are the crucial support levels on the downside. So traders need to monitor these support levels between 22,200 to 22,300 on the downside. If index manages to hold on to these levels and bulls spring back into action and they take the index beyond 22,700, then I think markets could be in for a more short covering rally and Nifty can actually go beyond 23,000 as well. We are still in that phase where markets are trying to form a base and at least see a good short covering rally. And the first pullback is usually met by equally strong sell as well. So this is the I believe this is that instance where after a good pullback on the indices, you are witnessing again a profit taking. So 22,300, 200 is something that I'll eye closely for the next couple of trading sessions. And if Nifty actually bounces back from these levels, I would look to go long on the Nifty with a stop loss somewhere around 22,000 and look for a target beyond 22,700 this time around.
All right, unless there is a decisive breakout from 22,700, the market is likely to remain choppy. But I see, Aditi, in this choppy market, you've given 2 buy calls. Tell us, what are your picks?
So I've got for to buy clearly because I also feel that this is an intermediate pullback and market should find its feet closer to about 22,300 and see a recovery. So the first one is Amar Raja Battery. I think the stock, after witnessing a significant correction from its peak, has formed a base now, taken support at key Fibonacci retracement levels. RSI is at comfortable level. At current levels, it definitely makes a buy for a target of 1160 with a stop loss somewhere around 925 on the downside. The second is Avanti Feed. This is one stock which has completely stood its ground and has been making higher highs, higher lows, despite the fact that markets have been volatile. So at current levels, Avanti Feeds also is a buy for a target of 950 on the upside with a stop loss at 765 on the downside.
So Avanti Feeds and Amara Raja, your picks. Thank you so much, Aditya, for joining us and taking the time out. Well, let's move on to the word from the wise then. Nilesh Shah, who's the MD and CEO of Envision Capital, shared his views on the market. He says that there is no need to create difference between large caps and SMIDs. Let's go across and listen into his take.
I don't think one should necessarily flock entirely towards large cap, because the biggest challenge with large caps is basically growth. Most of the large cap companies are not growing beyond the single digit rate. And when you are in equities, you are there for growth. You are not there essentially necessarily only and only for safety. I mean, instead of then large caps, you might as well be in fixed income and earn your certain 7 to 8%. So clearly, I would still believe that one should be constructive about the small cap space. One should be constructive about emerging businesses. One should be constructive about businesses which can sustain double-digit growth rates with a balance sheet which is intact, and with governance which essentially is kind of non-negotiable. So I think as long as there is growth, there's a strong balance sheet, and there's good governance, I wouldn't want to kind of necessarily make that distinction between large cap and mid to small cap.
All right, sir, that's Nilesh Shah's view on how one should not really differentiate much between large and SMIDs and park their money more in the stocks that have growth potential rather. But moving on to the top global voices remaining bullish on India, Chris Wood calls India the best structural story, while Jim Walker says policy stability makes it a standout time to double down. Florian Neto sees India's fiscal path as strong, but finds SMIDs pricey. Meanwhile, Vivek Paul bets big on India's AI pivot. Let's listen into these voices.
Given India's already corrected a lot, it will fall less. But the key market that will outperform if the US market's going down, well, there'll be the two markets which have got a chance of outperforming in the near. Well, they have been outperforming year to date, and they can do so more, I would say, are China and India. So China, I've increased my position in China in the last few months. China bottomed last September at about 8 times earnings. And although China is not booming, the Chinese market can double just on Chinese consumers going from pathologically cautious, which is what they were last year, to moderately cautious.
The state of policy generally, so monetary policy, fiscal policy, and exchange rate policy. India looks to, I said this in a report that went out yesterday to our clients, that India looks better to me now than at any time in the last 30 years in terms of policy stability. You know, I've said to clients this week that this is the time to absolutely double down on the long on India, go much, much longer. And they, although worry about the valuations in the Indian stock market, my view is that economic growth is going to take off from here. And those valuations will be very quickly supported by corporate earnings and by economic growth.
We do feel that the valuations that we are seeing on mid-cap is still a bit expensive compared to what we are seeing from an earning revision ratio on the market. Of course, you can selectively find some stocks, but in general, we do feel that now on the large cap, most of the resit on the valuation has been happening already. The Chinese rally is a tactical rally for now, in our view, but it can become more sustainable. So the question is on the leadership. And we do feel okay having an overweight on India and an overweight on China today in our portfolio. The overweight on China is not sustainable yet, and earnings there is not good enough yet. Okay. So there is good prospect for Chinese companies to deliver more because the business environment is evolving.
Structural opportunities are sizable in India. So if we were thinking for anybody with an investing horizon 5-10 years out, we would be building portfolios today using our core IP where you'd hold a greater allocation than a benchmark weight. And that's true for the bond market, that's true for the equity market as well. And that's a function of structural dynamics being positive for India. But on the structural side, the demographic sort of forces underpinning India are really strong. Most of the developed markets, China, are going to experience a shortfall in working age population over the coming 20 years. India's going to experience a big gain in working age population in the coming years. And you think about the geopolitical dynamics that we're in now, a multi-aligned country such as India is likely to benefit from that sort of environment more in the future.
All right, those were the top global voices weighing in on India as a strong structural story. But let's get you a snapshot of how the derivative diary looks like for this week. As far as this week's expiry is concerned, now the expiry is on 13th of March. And remember, this is a truncated week because we have Holi on the 14th of March. But for 13th March expiry, let's take a look at the levels. As far as Nifty is concerned, we see long unwinding happening. And for Nifty Bank, there's a short build-up which suggests a rather bearish trend as far as Nifty Bank is concerned. So let's look at the active calls. Then the first level to watch out for is 22,500. The first call writing level. The second call writing is at 22,600, automatically making 22,600 as the level for resistance. As far as the active puts are concerned, the first level is 22,400 and the second level to watch out for is 22,300 on the downside. So those are the levels to watch out for as far as the derivative diaries is concerned for 13th of March expiry. But let's move on to the stock that was in focus today. That was IndusInd Bank. That was languishing in trade today, down almost 6%. It did, spike up a little after that, but it managed to close down almost 3.8% in trade after RBI extended the MD and CEO's tenure by a year. My colleague Gaurav is joining in with the brokerages and what they're penciling in.
First, let's understand what the news is with IndusInd Bank, and now RBI has reappointed Mr. Sumant Katpalia as MD and CEO for the next 1 year. Why this is a negative read-through is that the board has actually recommended that he should get reappointed for the next 3 years, and this is actually a second instance where RBI's reappointment policies did not allow him to get reappointed for the 3 years, and that is the reason why when we look at the overall read-through, it is getting negative for IndusInd Bank. It also leads to speculation that after 1 year we may see churn in the position of CEO, and at the same time it also shows that RBI is a little bit reservative when we talk about IndusInd Bank's leadership. Now with this, brokerages are also being a little bearish. IIFL cut their target price to around 910 rupees. Why? Because they are now actually penciling in price to book value, a forward price to book value of 0.9 times, which is actually lower than the one time that banks usually get for the business. Other than that, when we look at other brokerages also, we saw the rate cuts and as well as the target price cut across the board. So we've got Jefferies who actually cut their target price to 1,080 rupees because what they are saying is that recently bank has already been under pressure because of the MFI segment, and with this new move, it also shows uncertainty with the leadership. When we talk about Elara, we are seeing some rate cuts from there as well. Other than that, Motilal Oswal also maintained their target price to around 1,100 rupees. And lastly, when we look at Nuvama, they have maintained their hold rating and a target price of 1,115 rupees. But what they are saying is that now in the near term, the earnings visibility will also get lower if there is churn in the upper management. So definitely a negative read-through coming up from brokerages as well. And as a result, we are seeing some pressure in IndusInd Bank's share price. So definitely watching out on this counter on the back of the news flow that we have received recently from RBI.
All right, that's one stock that is in focus today. But let's move on and figure out the other stocks that were in focus today. And for that, my colleague Rabinder is joining in. Over to you, Rabinder.
Well, Narayana Rudralaya is in focus, where Health City Cayman Island and its wholly owned subsidiary has entered into a joint venture agreement which aims to establish and operate a network of healthcare centers in India, specifically for treatment of cancer patients, and with a focus of chemotherapy service, and it will be a 50-50% joint venture. Moving to next, JSW Steel were also in focus, where company has announced its February month production data, and the consolidated production for Feb 2025 is at 24.07 lakh tons, which saw a uptick of 12% year on year basis, and Indian operation was saw a growth of 13% year on year basis. If we talk about capacity utilization for Feb month 2025 at Indian operation, it was at 93.5%. Moving to next, IDBI Bank is also in focus, where the government stake sale agreement to be finalized this month, and it is expected that the IDBI stake sale to be completed by H1 FY26. And as per media report, the total of 60.72 stake in the bank, including a 30.48 from the government and 30.24 from the promoter LIC, along with the transfer of management control in the bank, and it will be the largest privatization exercise since the disinvestment of Air India. Moving to next, Jubilant Foodwork were also in focus, where Jeffries has come out with a note on Jubilant Foodwork, and they have given a buy call with target price of ₹1,000. They have put the stock in the high conviction buy and best pick in the retail and discretionary sector, and the stock has been underperformed recently, which gives a good opportunity, and EBITDA margin is expected to expand 200 basis points between FY24 to 27. They say that the better growth and margin is expected as SSG improves due to management strategic efforts.
All right, those were all the stocks that were in focus today in today's trading session. But Jana Small Finance Bank is also making steady progress towards its goal for the loan book. That, according to Ajay Kanwal, who's the MD and CEO of Jana Small Finance Bank. Let's go across and listen into what else he had to say about the company's roadmap for growth.
We had committed that we will turn 80% secured. So we are moving on that journey a bit faster given all the challenges in the MFI piece. On the MFI book, we really had seen the challenge peak out in Q2 itself. So Q3 has been better, and that's in the results. Q4 tends to be slightly better, not significantly better. The only reason it's not significantly better in our head is we did see a small amount of slowdown in Karnataka. I think that is stabilizing. So we certainly should see a better Q4, but not significantly better, and then Q1 onwards, more steadier.
All right, with that, it's a wrap on this edition of Your Trades. I'll take your leave. Thank you so much for tuning in.